Good afternoon, traders and investors. Will back here with another one. Hope all of you have had a very beautiful long weekend so far. And it's that time of the week again, guys, where we go over the top 5 options plays for the upcoming week. Now, keep in mind, guys, all of these options plays are going to be for selling options, more specifically for selling put options as part of the larger wheel strategy that we run on the channel. Now, guys, keep in mind that this strategy is one of my favorite strategies for the following reasons. It has a very high win percentage rate. Usually 90+% of all trades that we do end up being winners by the end of the week. And the ones that we do get assigned, usually we're able to get out of those within the first week or two. Very high win rate probability, which is why reason number 1, I love this strategy. Number 2 reason why I love this strategy is because of the time management factor. It's a very passive strategy. It really only requires about half an hour to about an hour's worth of work for the whole week. Usually most of that is done on the Monday or Tuesday session to find the trades. Then when we get into the trades, we just let the market do the work and let the time decay come out of the option and into our pockets. And the number 3 reason, guys, is because it's a strategy with relatively low risk. The way that we run this strategy, guys, the assignment risk is very, very small. And even if we are getting assigned, we're getting assigned at massive support areas on very solid companies. So the risk profile is fairly low as a whole. So that being said, guys, in terms of today's video, what we're going to get into is number 1, go over last week's top 5 options plays, see how those performed, and then of course get into this week's top 5 options plays. And as per usual, I do have a number of different bonus plays for you guys as well. So without further ado, guys, let's get right into today's video. So in terms of the context for the week, guys, well, we obviously know that the bulls have done a great job over the last few weeks of bringing back this market, especially on the SPY, towards the all-time highs. So the bulls, in terms of our longer-term timeframes, are still massively in control. Big monthly timeframe control, big weekly timeframe control now again, and now daily timeframe control as well. So all in all, guys, we have some very good support levels below us. I do not expect the markets to really come unraveling over the course of this week, even on the QQQs as well, large support areas below us. So in the event we do have somewhat of a drop, there is still some very large support areas with some very large bulls sitting there waiting to buy the dips. So all in all, pretty good week to be running the wheel strategy as well. Keep in mind, guys, we do have a couple of macro events this week that could impact the markets. On the Tuesday session tomorrow, we have ISM manufacturing. Got to be a bit careful with this one, guys. This is the one report that started unraveling the market roughly 1 month ago. We will see how that one goes. Could be a volatility event, which could provide some good opportunities. If the market is red tomorrow, we may be able to fire off a number of juicy short put options. And then on Thursday is another big day here, guys. We get the ISM services PMI, which is an inflation gauge, and we also get some ADP employment changes. Now, this coupled with the Friday's report, which is going to be the non-farm payrolls, are going to be the 2 most important reports of the week. Jobs, 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 guys. We know now in the environment where we're expecting rate cuts, we need to monitor 2 things closely. Inflation is no longer a concern. The concern right now is whether or not the economy is slowing down too quickly as a byproduct of high interest rates. And those 2 things that we're going to be monitoring are any output data from the economy, such as your manufacturing data right there, and also any jobs reports to signal any continued weakness in the labor market, which could affect these markets. Now, although these are volatile events for the week, I still do think that the markets have a wide margin of error and that we should be able to run this strategy fairly well this week as well. So that being said, guys, let's jump right into last week's top 5 options plays and see how those performed. So play number 1 that we were looking at here, guys, before we do that, have to go over the strategy rules, right? So before that, in terms of the strategy rules, guys, we're going to go through these very, very, very briefly. If you haven't seen, guys, I have a 30-minute video completely for free on the channel. I'll leave it in the top right link in the corner right now, and down below in the description, where I go over the details of this strategy, how I pick my stocks, how I pick my strikes, and just a more in-depth detailed analysis into the strategy. So I'll leave that down below if ever you want to take a look. As per now, guys, let's go over these very, very briefly. So the put wheel, what does a put wheel entail, guys? Well, number 1, we are going to be selling puts. If you guys aren't familiar with selling puts, basically think at it as like a buy limit order that pays you, right? So let's say we have Google stock up here, and let's say we want to buy 100 shares of Google down here at the $160 mark, roughly in line with our previous support of the last couple of weeks. Well, there's 2 ways to do that. Either you can set a buy limit order down here for 100 shares, and if in the event the market just continues rallying to the upside, you just don't get anything. You don't get any shares, and you also don't get any options premium, right? So it kind of just sits there unless it gets filled. that is where the short put orders come in. We can replicate a buy limit order, except we can get paid for it in the process. Let me explain a little bit further. Take a look here. Here's your options chain for Google coming up in the forthcoming week. So you can see at the $160 strike, if we were to sell those puts to open, we would be collecting around $66 in the process. Now, in the event Google ends above 160 by the Friday close, we will get to keep all of this $66 in premium, and we don't have to buy any shares. So basically just collecting a lot of premium there. However, if it ends below the 160, well, then we're going to have to buy the shares as we wanted to anyways, aka that is your buy limit order, right? And we still get to keep these $66. Now, this goes obviously to reduce our average cost here on the $160 assignment by about 66 cents. So your average cost, if assigned, would be closer to about $159.44, right? And then in the event that we want to get out of that trade, we will be selling covered calls against the position and probably be called away, get out of those shares with a sell limit order, which is known as the covered call. Now, let's get into a few of the strategy rules, guys. Number one, we always want to be writing puts on a solid company. Rule number one for a reason, guys, never write any short puts on a company you do not want to own at the strike price if you do not want to own the shares there. It's rule number one for a reason, guys, because in the event you get assigned and the stock continues to decline, you need to have high conviction as to why you are in the position. If you're in a company that you do not know much about, guys, managing that position, managing the loss is going to be a little bit mentally challenging for a lot of people because you just don't have high conviction in the trade, right? So rule number one, solid companies only. Now, rule number two right here, we want to be targeting stocks that are in a monthly uptrend or at least a long-term range. That lets us know that there are large bulls sitting there that are be willing to buy the dip and back us up at the support area, right? Number three, no earnings this week at all. So just to reduce our chances of being assigned and reduce the chances of being caught in a volatility trap, you guys have seen the amount of declines that earnings can have so far this season, right? Minus 10%, minus 20%. So if you do not want to be caught off guard and being assigned and managing a significant loss during earnings, guys, just don't do it as a whole. It's not worth it. Yes, it can increase ROI ever so slightly, but if you want to really stay true to the rules of the strategy and avoid any significant losses, right? Well, then just do not be writing any puts on a stock that has earnings this week. Number four, we want to be writing stocks at a support area or a breakout retest area. I always bring out this chart right here, guys. So this is Autodesk, right? A large support area would be this pretty much year-and-a-half range down here. Usually always a good proposition to be writing puts in a massive area of support. The breakout retest is very simple as well, high probability trade. You can see the upper bound of our weekly resistance right here. We get the breakout of that range, the retest of the top end of this range, and then run. This retest area right here is a very high probability trade as well. So mostly all of the trades you'll see on the channel, guys, will be one of these two things. Now, these next 2 points go hand in hand. We want to be writing at or lower than the expected move, guys. If you don't know what the expected move of a stock is in a given week, you can always go to this free website right here, optionsai.com. They have a free expected move calculator. That's just Wall Street's estimates of how much up or down a stock can move in a given week. Here you can see we have OXY pulled up, and they're expected to move about 1.8%. So when we're writing puts, we want to be writing below the expected move, guys, right? Just because the further we go from the expected move on a week, usually there's going to be some mean reversion on that stock, and we're going to get a little bit of a bounce. So we always want to be writing below the expected move. Couple that with writing on a red or flat day. Now, obviously, if the week starts out and we start off getting 1 or 2 red days into the expected move, it's going to free up strikes even lower and lower than that expected move, which once again increases our odds of not being assigned, right? Now, the before last rule right here, we want to be writing between 0.5% and 0.75% in weekly premium. This is really the art form of this strategy. After running this strategy consistently, guys, for the last 5-6 years at this point, this is my sweet spot for these options. Not only do you not have that great of a risk of being assigned, but it also provides you very, very decent ROI for your capital exposure. If you're always writing between 0.5% and 0.75%, your annualized ROI without any compounding whatever should be 0.5% times 52 weeks, which would be about 26% annualized, roughly 2 times the annual S&P performance, and that is being very, very conservative. If you want to know how to do this very, very easily in your head, guys, 0.5%, just look for half of the strike price right here in cent increments. So if you want to know you're getting paid adequately for your capital, just divide this by 2. So 160 divided by 2 is 80, and you would need to see about 80 cents on the bid right there. If you want me to do the calculation just to show you guys that it works, just very, very easy mental math. 0.8 divided by our 160 strike, that is literally 0.5% in a week. That's how we can go through a ton of options chains really, really quickly and just know in our heads whether or not that strike is worth it for it or not. And then lastly, guys, we want to set a take profit order at 90% of the contract value. That's for 2 reasons. Number 1, because very possibly in the first 1 or 2 days after we write these positions, if the stock moves up, our trades will probably be 90% plus profitable. So you want to take that money off of the table because there might just be other opportunities that we can then reallocate the capital to, right? So it's really just a question of being capital efficient and not round tripping any gains whatsoever. And then lastly, guys, if we get assigned any position, so if the stock ends below our strike prices for the puts, we will have to buy the shares. Now, what do we do when we buy the shares? So as we know, a short put is a buy limit order to get into the stock. Selling covered calls is how to get out of the stock. So this is a buy limit order. This is a sell limit order. What we want to do is we want to be writing covered calls at our assigned strike price pretty much and targeting between 0.5% and 1% in weekly premium. Same rules as above, although the calls always do pay a little bit more here, guys. So we're going to be targeting this rules right here. And as I said, we're going to write at our assigned price or 1 strike higher. The only time I'll be writing 1 strike higher, guys, is let's say we get assigned Google at $160 by this Friday, right? And then let's say on the following Monday thereafter, the stock just gaps up to about 162, 163 right away. That is maybe one only condition where I'll consider writing the following strike above rather than writing directly at my assignment price, guys, if it gaps up the following Monday after being assigned. So hopefully all of those rules make sense here, guys. Now let's dive right into our top 5 options plays of last week and see how they performed. So in terms of OXY was the options trade number 1, and we were looking for trades around the $56 range. Now, happy to say, guys, the premium did obviously get freed up on the Tuesday morning session. So Tuesday provided us a great opportunity to be writing at the $56 strike, and you would have been able to pocket all of that premium if you did write those contracts because OXY ended closer to $57. So very, very easy trade to make. And we took this one in my own personal private Discord right here with the group, guys. 56 puts, 21 cents for about 0.5% with the remaining time to the remainder of the week. And we had a beautiful win on these guys. So OXY, great trade from last week. Happy with the way that one played out. The second trade was Google. So Google, once again, guys, we were looking last week for some potential prices down here in lower than the 162 range, which would have been right there, right? So we were looking for either 162.50 or the 160s. Now, I'm happy to say, guys, that as of the Tuesday morning session and even early into the Wednesday session, we did have both of those strikes available. The 162.5s for a little bit more premium and the 160s for a little bit less premium. The trade was very good and either one of those strikes would have been profitable. The stock ending pretty much around the $165 mark. We took this one a bit later in the week as well. As you can see down here, we actually took this one very late in the week, guys, on a Thursday, and we ended up with a win as well. So very nice trade for that one as well, guys. I took it a tiny little bit late because we were going in and out of a lot of different positions, but this one was another win under our belts. Now, trade number 3, guys, was looking at Airbnb. So we wanted to have Airbnb anywhere between 112 to about 110. Now, unfortunately, this is one that did not work out, not because we lost money on the trade, but the trade just never got opened up, right? So take a look right here. This is your Monday session and Tuesday sessions. We only got about as low as 115, and there wasn't that much volatility on those contracts. We would have really needed it to come down into maybe the 114s, 113s to free up the 112s down to the 110s. It just didn't get there, guys. It kind of hesitated around and then rallied into the end of the week. So there was just no trade on Airbnb. The idea was good. The levels we were targeting were good, but we just didn't get any big red candles into that zone to free up those lower strikes. So that's trade number 3. Now, the next trade we were looking at, guys, was AMD. So AMD, we were looking for AMD, guys, really in the lower 141 to about 139. Right about here. And happy to say here, guys, that this trade was freed up on the Monday and Tuesday session at the lows, and even on the Wednesday session prior to the NVIDIA earnings, right? So if you would have taken that trade anywhere between the 141 and 139 strikes, they were all available. That would have been a 100% win on those. So happy with the way that one played out, guys. Personally, myself, we did take this one in the Discord group. We took a tiny little bit of a loss on it just because we were trying to benefit from a pre-NVIDIA earnings rally that never happened. So we just de-risked. So essentially, I closed the AMD contracts and went with some earnings plays on NVIDIA instead. So we got some wins on NVIDIA. I closed this one at a tiny little loss. The idea was good. If you would have kept it all throughout the week, not wanting to play NVIDIA earnings such as myself, then that trade would have ended up with as a winner. So very nice trade, very nice level as well on AMD. Happy with the one that played out, the way that played out. And the last one was Charles Schwab. So Charles Schwab, we were looking for this one, guys, because it was in a very nice area of big weekly support. Take a look at this really big weekly support range, really being supported in the last 5, 6, 7 weeks of trading as well. And we were taking a look at the $62 or $61 strikes all the way at the bottom end of the range. Now, happy to say, guys, that this one did free up on the Tuesday and even early Wednesday session. We were getting some pretty decent premiums down here in the lower 62s. The 61s, however, were not freed up. So the 62s were a good little trade right here. And if you would have taken that one, guys, pretty much the trade would have ended up with premium in your pocket entirely as the stock closed well above the $65 mark. So another beautiful trade opportunity that was executed quite properly. Happy with the way this played out. So another week, guys, where most of all the trades that we've given you guys have ended up being true winners, right? So very, very happy with the way last week played out. Now let's get into this week's top 5 options plays, and you'll see that a lot of them are recurring because they are still within our larger weekly support levels. So trade number 1 is once again going to be Google coming back, this time Google with an L. So let's take a look at Google right here, and we can see the expected move for the week is 160.5. So we want to be looking for some premium below that level. The reason that I like Google down here so much is because they're kind of trailing the rest of the big tech trade, guys. Take a look at Apple. Apple has had a tremendous recovery since the lows. Take a look at Amazon. Amazon as well has had a tremendous recovery from the lows. The only couple ones that have kind of been left behind, right, are the following trades. The only one of our Mag 6 names, no Tesla. The only ones that have kind of been left behind are still Microsoft, still relatively close to where we were bottoming out, right? And the other one is Google. Everything else has rallied significantly more. So I think Google is kind of lagging behind, and I would love to pick up some shares down here in this lower location. The valuation is good. The company is firing on all cylinders. No red flags in the fundamentals whatsoever. Just getting a little bit left behind by the market right now. So provides us a great trade opportunity. Now the expected move is 160.5. So let's go have a look together on the options chain. Can we find something better than 160.5? For our required 0.5% in weekly premium. So let's have a look right here on Google. As you can see, at the 160 mark, there is currently not yet enough premium, guys. But keep in mind, this is a shortened trading week, only 4 days left. So we can afford to get slightly under our desired premium, right? Because we only have 4 trading days. So I will explain. We can take this on a daily ROI fashion. It requires a little bit more math, but you guys will understand, right? So if we're getting 0.66 divided by roughly 160, that is roughly 4, right? Roughly 0.4%. But keep in mind, we only have 1 remaining day. So it stands to argue we're getting roughly 0.1% for every single remaining day, right? If you had 5 days, you'd like to see 0.05, but since we only have 0.4, since we only have 4 days, 0.4 is just fine. So I would not mind taking this trade right here, even at 66 cents for the 160s. So the trade is ready, guys. Anything better than 66 cents can be a decent trade opportunity. Now, obviously, if Google just drops on the Monday morning session and we come down 162, 161, well, that may even free up the 157.5s. Same logic applies, guys. If we can see at least 60 cents right here, I would be happy in taking either one of these 2 strikes. So those are going to be the trade opportunities for Google over the course of this week. Now, moving on to stock number 2 is going to be another one that's recurring, guys. We're going to take a look at Airbnb. So Airbnb, the expected move for the week is 114.7. So let us go shopping. Let us see if we can go shopping on Airbnb. I really want to get as close as possible, guys, to my big green box of support, which is closer to around the 111 down all the way to about 100, but closer to the top end right here. Target the 111 down to maybe about 109. So stands to argue, since we're still relatively far away, we may need a little bit of a drop on the Monday or Tuesday session. So I'll be watching for that. But now, tentatively, let's go have a look. Can we find some decent premiums on Airbnb? Below the expected move here of 114.70. perhaps closer to maybe the 112, 111s, right? So let's go have a look right here. And as we can see, there's really not that much premium available, right? Even at the 114s, not so much available. Let's just do some quick math right here, right? 40 cents divided by your 114, only about 0.035, so 0.35% per the week. It's just a little bit light here, guys. We'd at least like to see about 50 cents there. So what we're gonna look at on Airbnb, guys, the trade is somewhat ready. We just need that 1 or 2 little days of red, bringing us down into maybe the 115, 114, and that should be able to free up at least some decent premiums on the 112, 113s, 112s, and maybe even 111. As I said, guys, since there's only 4 days of trading this week, your minimums for roughly that, 0.5% rule would be roughly, let's just do it like this. Let's do some reverse math, right? We're going to be looking for 0.004 instead of 0.005 times your 113 strike at a minimum. So you'll want to see at least 45 cents on this 113s for it to be worth it for you. But I really like this trade. I would not mind being assigned, guys. Airbnb's fundamentals were fantastic after the last earnings. No problem at all with this company. Such a beautiful level to be picking up at a discount. Now, trade number 3, guys, we're going to be looking at is once again going to be OXY. And before I get into it, give me a very brief second. And let's have a look, right? So OXY, let's have a look. $57. Let's have a look at the expected move, guys. OXY, we've been trading this one for a few weeks running, and every time we come down into this $56, $55 location, I love picking up this stock, guys. This is one of only 2 petroleum companies that Warren Buffett owns, and he's owned it for a very, very long time. Stands to argue, right? If Warren Buffett is running tens of billions of dollars in this company, well, we can probably at least pick up 100 shares, right? So keeping that in mind, I know obviously that's not the entire investing thesis behind the company. Company's fundamentals are very good. The valuation is very good. I just really like the support area. This green line right here is also the 200 weekly moving average. So a lot of confluence down here. The expected move for the week is 55.95. So let's go see if we can find some premium below that $56 mark on OXY. So let's pull it up and have a look. So as you can see, guys, there's only really going to be 2 strikes that are available. One is the 56s that are trading at about 20 cents right now. And then we have the 55s, which is really not giving much. So let's see if at the 56s, I would not be opposed to doing the 56s, even if it's right at our expected move, guys, just because of the sheer size of the support level. Now, obviously, if we get a tremendous drop on the Monday morning session, bringing us down to maybe the low 56s, even high 55s, right? That would be maybe a 2% drop on OXY. If we can come down into the low 56s, high 55s, then you may even see some premium on the 55s. So one of these 2 strikes, guys, would really do it for me. And as you can see, if we're looking for, let's see, this week we're going to be looking for 0.4%, right, on the bid, just because on a full weekly basis, that would be 0.5%. So let's divide this real quick, 0.19 divided by 56. And you can see here, guys, not quite enough, right? So how much exactly would we need? Just do 0.004 divided by or times 56 rather. You need to see a little bit more, 22 cents, right? So it's almost there, but not quite. So I'm going to be looking for one of these 2 strikes, guys. And as I said, we're going to be looking for about 20 cents on either one of those. So that's pretty much it for OXY. Now let's get into the next trade here, guys. And it's going to be another recurring trade. It's going to be AMD. So AMD looking very, very healthy right now. What are we trying to find? We're trying to find the weekly higher lows here, guys. The bulls are trying to set up for the weekly higher lows to potentially manifest into a new weekly uptrend. We know this location right down here, this green box, is tremendous support, 141 all the way down to roughly 128, but really have a more close support level right here, bottoming out when the stock was crashing pretty much, big resistance when the stock was trying to recover, and this is the 137 level. So even though the expected move is here at 143, we want to be going a little bit lower, guys, just to get into this margin of safety, big support area right there, right? So let's go have a look, guys. Can we find any premium below the 142.88 for the week? So let's have a look on AMD stock. Let's see if I can pull it up right here. I am very surprised. I do not have AMD right there. That is, oh no, it is right there. I was about to say that's blasphemy because it's one of my most highly traded stocks. So let's go have a look. Anything below 142. So as we can see, guys, there's actually some very decent premium here. Even at the 141s, we're getting literally 0.5% for only 4 days worth of trading. We can probably go a little bit lower though, 140 at maybe 139. So if we divide maybe the 0.56 divided by our 140 strike, you can see literally getting our 0.4%, which on a full weekly basis of 5 days would equate to roughly 0.5%, right? So looking quite good on that one, not gonna lie, but we can even get a little bit more greedy, guys, in the event that AMD has a little bit of a decline here on the Monday or Tuesday session, perhaps bringing us back into the Friday lows of 146, 145, maybe even 144, right? That is going to free up much better strikes. Probably going to free up the 139, 138, maybe even the 137. So the moral of the story for this strategy, guys, is that we are going to be adjusting our strikes depending on the size of a pullback on a Monday or Tuesday session. Obviously, if Airbnb has a minus 4% day right away out of the gate on Monday and comes all the way down here to 142, are we going to be still riding super close, 141, 140? No, that's going to be too close, right? We're going to go even lower in the options chain and find where we can get 0.5%. At that point, it may even be in the mid 130 level. So essentially the gist of things, guys, I really like 140 and below. 140 down to about 135, as low as we can go while still getting our minimum premium targets. The valuation of AMD down in these levels is extremely cheap, which is why I still love this stock. Now, moving on to trade number 5, guys, we're going to be looking at Square. So Square is one that we used to play a lot on the channel back here as of a few weeks ago, and now it's pretty much come back and hovering around that same level. The reason I love Square in this location right there, guys, is because you can see how solid the support level is. This is 2 years worth of support right there, pretty much all the way from 62 down to about 54, right? So about that 10% range is what we're kind of targeting for this stock. And the fundamentals of this company at this level is extremely cheap, guys. They're trading at literally a 0.43 peg. That is absolutely nothing for Square right now. Probably one of my favorite pair of fintech trades, them and SoFi. Look at this EPS expansion over the next couple of years, and the revenue expansion is fairly good as well. So picking up Square at these low valuations at this very large support area could be a very nice trade, guys. In the event we maybe get assigned and then the stock runs a little bit, we're going to probably be able to make a decent amount of money, which is why I love this level. So taking a look at the expected move on Square for this week, guys, 63.64 is the expected move. So let us see if we can get any premium below 63.64. Let's pull it up real quick, shall we? So looking at Square right now. So moving into Square. So as you can see here for Square, guys, 63 is paying roughly 34 cents, which is above our 0.5% rule. Let's take a look at the 62s, however, and see if it respects our minimums. So 0.24 divided by 62. Let's pull it up real quick. You can see we're very close to the 0.4% rule that we were looking for the shortened trading week. So I would like this one a lot here, guys. $62 short puts. Now, in the event Square has a little bit of a red day on the Monday session and we come down maybe into the 65s, 64 area right there, well, that's going to free up probably even better strikes, talking maybe even about the 61s or even $60 strikes, right? So our goal as traders of this strategy, guys, is to adjust our strike prices. So long as we're below the expected move, we want to be getting as low as possible, guys, while still getting our target premium. So I really like the 62s at a first glance. 62 down to about 59 is going to be my desired strike range for the course of the week. And that pretty much wraps up our top 5 options plays for the upcoming week here, guys. But there is a number of bonus plays that I always keep on the back burner. So let me give you a few of those that I'll be looking at on the side. I'll keep them on a watch list on the side because they're not quite ready yet. They're almost ready, but not quite yet. So I kind of leave them on a watch list and look at them every day to see if there's some opportunities that open up, right? Number 1 is going to be SoFi. So SoFi, I love this company down. However, down here in the $7.50 to about $7 range. Now it is significantly above that now, but in the event the bulls have to retrace a little bit to set up for some weekly higher lows into these big moving averages on the weekly down here, $7.50 down to $7 would be an area that I would be willing to play this stock a lot. You guys have obviously seen me play this stock a ton in the last 3-4 months of trading, and it's always had a very good result, right? In the event we get assigned, we can usually write covered calls and we're out of it within the next 2-3 weeks of time. We've made really good money on the channel on SoFi this year. So hopefully that continues if we get a little bit of a dip buying opportunity back into the mid $7 range. Another stock that I'm constantly looking out for is UPS. So UPS is now pretty much crushed back into a big support area right here, which is in line with our prior resistance from all the way back 2017 and 2018. So this lower $120 range, 125 and better, guys, I will be looking to play UPS. The only problem with UPS is that we need to have a big, fairly big red Monday or Tuesday to free up some premium, because usually the options premiums are not that good. You have to almost be right on top of the stock, right? Take a look at the stock price right now. It's literally about $128.50. And you can see, even if we go $1 under, guys, that's where your 0.5% rule is, right? So very, very, very small margin of error for assignment. So I would love to see UPS come down 2-3% in a day in the lower range right here. 125 and better, guys, I will be looking to take that trade most likely. Another one we can look at, guys, is CRM. So CRM, I love this company. They just most recently had their earnings, except they're not quite close to my desired target range of support, which starts at 242 down to about 230. So I keep this one on the back burner here, guys. In the event over the next 1 week or two, we start moving lower into this range, I'll be looking to sell some short puts probably in the low 240s. High 230s. Love this one as a company. Then the next one we can look at, guys, is CELH, one of our falling stars of the growth trade so far. But now we're really coming into very, very good value for CELH. The market cap of the company right now is under $9 billion. Very, very cheap for this company right now. And the valuation down here in the mid 30s is quite good as a whole, 1.27 peg. So this whole support area on the weekly, guys, right? Let's call it 35 down to about 31. I like this level. I will probably be looking to play CLH this week. If we can open up the week perhaps with 1 or 2 red candles and get some strikes below 35, think 34, 33, 32, I will be looking to play this one absolutely. And the last bonus play that I'm going to be looking out for, guys, is Elf Beauty. We went over their earnings. Their earnings were very, very good. And the valuation right now is a lot more manageable. However, Elf is known to move a lot. When I like playing this one, guys, is when we can get a big downside move on a Monday or Tuesday, 5-6% to the downside. I'll be possibly looking to play the lower strikes down here, talking about maybe 135 all the way down to about 131, the lower end of this support range, right? That is where I like playing Elf Beauty. I've played it a few times in the most recent weeks, and it usually always provides a very wide margin of error. If you can catch it on a down day, 5-6% to the downside, Monday or Tuesday, we can usually write, 8, 9, 10% below that and usually have a very good margin of safety. So those are pretty much all of the bonus plays as well, guys. But you know me, I have tons and tons of these, right? So in the event you want to trade with us live and get all of my trade alerts live and participate in the Discord to have all these juicy wins, I will leave the link to our private Discord down below where you can see all of my trades. You can ask me questions all throughout the day. We have private live streams at the market open every Monday through Friday, exclusive content, and so much more, guys. I'll leave the link down below in the description in the event you do want to join. If not, guys, always feel free to click the like button on the video. Would appreciate it for the growth of the channel. Also, consider subscribing if you're new here, guys. Would love to see you again. We do these videos every single Sunday or Monday, pretty much in the event of a holiday, right? The day before the market opens for the new week. And we also do the Monday through Friday daily market recap. So hopefully to see you back in a future video from me. And lastly, if you have any questions at all, guys, on the strategy, on how I pick my options, if you have a potential play that you want a second opinion on, anything you'd like, guys, always feel free to leave it down below in the comments, and I'll usually get back to you within the first 24 hours. So take care, guys. Hope you had a good weekend again. I'll see you over the course of the week. Love you guys, and peace.